Hey, good morning, everybody. Welcome to the Morning Vol Report. It is Andrew Giovinazzi, Chief Operating Officer of OptionPick.com, welcoming you to our Morning Vol Report. Or you could have got Mark's research on Cramer last night. Boop. Anyway, there's also a place you can find that content on our website. Go to the homepage, check our blog and some of the stuff we do outside of Option Pit. Generally, we post on our blog. And our event page is our Vol Masterclass. So, if you want to understand what Cramer is talking about here, you take our Vol class here, right? It's a 10-week class. It's an hour a week. There'll be a little side work for people that are interested. And the idea is it shows you how the vol products work, right? From like beginning, understanding realized vol, how that percolates through the system, how the market prices it, how the market prices volatility products especially, okay? And you can check out all the stuff, right? So if you're looking at all this stuff, right, how the vol products work, way to quantify trades, the way to price trades out, to do real risk reward on trades. If you don't understand any of that, this is what we teach you. Okay. So you leave the class knowing what's going on. You'll have understanding a trade per class. Okay. Lastly, if you upgrade to platinum, right, we will actually give you our vol course. All right. So take a look at that. You should be seeing. But anyway, pop over to our website, and again, understand how vol works. Okay. Because generally, I don't think, at least the way a lot of people talk about volatility, it trades differently than how you think it trades. Okay? Sometimes it trades how you think it trades, other times it trades differently. And with that, we'll just talk a little bit about today what's going on. So, I think the rally continues. Again, Mark was talking about, or Mark was helping Cramer talk about vol and the future. He was talking about VIX specifically and the S&P 500. So, you have the Qs rallying. Okay, 0.5% is pretty solid, pretty close. That's an 8% vol move. Okay, 8% vol right now. The vol course starts on January 17th, Charles. Just so you know. So the idea is, what are you actually looking at? Okay, so with VIX is going to be a reflection of what happens in the SPX, right? So you've got the SPX volatility is down fractionally. Okay. What's funny is when I was an SPX trader on the CBOE, this is where the SPX volatility traded normally. The sigma was like 7.5%, a lot. 13% sigma, which is like volatility per strike here. That used to be 13, 14 is where you wanted to sell it. Okay, that's in the mid-90s. Now, vol trades at different places at different times. But right now, we've got very low vol, but we also have very low realized vol, right? So the market is just not moving a lot. Okay, the market's not moving a lot, so the premium is going to be in the VIX futures, right? So the trades that we have in our strategy letter, the trade ideas that we've been looking at is, we want to trade, you want to sell where the premium is. February volatility is 14.94. Okay, that's $3.20 over. That's fairish. Okay, but that's still a lot of premium in the Feb future, a lot of premium in the Jan future, 13.25. Okay, I think that was trading 13.5 yesterday. So you're going to start to see, the vol product should start to drift if these futures drift a little bit lower. And right now, they're just hanging in there. Okay, but if you see more of this action today, more of the same type of action, you're going to see those vol futures start to drift a little lower again. Okay, right? Because don't forget, this January future at 13.20 has to go to this cash number at some point. The thing is, we just never know where that cash number is going to be, right, at expiration. So that's what we have for VIX. So the premium is in the vol futures. It's not necessarily in the VIX cash itself. VIX cash itself is very cheap. That's another type of trade which we'll discuss in our chat today. As far as stocks that are moving around, it looks like the Q stocks are starting to move a little bit. Financials have sort of stopped after a massive rally. Commodity stocks are starting to move again. Gold is starting to move again. So there were some trades that we looked at. I like kind of long Nugget and UGT and hedge a little bit with regular gold. For whatever reason, it's starting a trip back. We started looking at Nugget maybe, I don't know, what was it, $6, $6.25, something like that. So it feels like, again, the cash is going to the products and the places that have been beaten down a little bit, and the stuff like financials is starting to hit a bit of a roadblock as we, as we move forward until the sort of the future expectation needs to become reality at this point. All right. So with that, I don't expect much to change here, even with VIX moving up, down a little bit. You're just not seeing a lot. So again, I think VIX is also right now, it's close to the bottom of its range. Remember, the dead low is 10. I think VIX. I'm trying to remember if it's actually printed a single digit before, like 9 point something, which would be extremely low for volatility. It's possible for it to get there, but it's right, say, in the middle of what we call zone 1. It's at the very low end of the range, but it can go lower. And if the market keeps moving like this, it will. So whatever you have, you're planning for sort of a slide down, a slow slide down. But as we saw last week, the pops can be quick. So that's sort of how you structure your positions for vol products. And with that, I will see many of you in our chat room shortly. Everybody have a good day. Don't forget, check out on our blog anything you're interested in our volatility class. Go to our website, just hit the blog, and also you can see Mark's thoughts on VIX and VVIX. All right, everybody, have a good day. All right, bye-bye.